Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, September 17th, 2008. Well, the Wall Street was decimated today, folks, no doubt about it. It's been one of the wildest trading periods in my history of trading, and most people's out there. We're literally making historic moves in this market based on historic factors. And what do I mean by that? Well, the whole collapse of our financial system, or we're being on the verge of one, based on all this bad credit, bad debt, the country being in debt, individuals being in debt, these mortgages that are just going under because of all that nonsense, just continuing today, folks, to hammer Wall Street. Now, we talked yesterday in the video about AIG and the importance of AIG surviving. Well, they got bailed out yesterday. All right, we had slightly favored that all throughout the chat room and just talked about the idea that they wouldn't probably let it go under. Sure enough, yesterday after the bell, the Fed comes out and gives them an $85 billion basic loan, I think, for 2 years, which in sense gave the Fed the ownership of 80% in AIG. Now, fine, so they save AIG. Big deal. Do you think the market rallies? Well, maybe. I mean, they did bail them out, essentially. But no, the market does not rally. The market gets crushed today, folks. We're talking about 4 to 5% losses on the indexes here. The Dow was down 450 points. The NASDAQ, this is amazing, folks, down 109 points, or almost 5%. And the S&P was down 57 points, or 4.7%. What was the going on here? Because this is where it all comes into, folks, is that people just realize that it's getting harder and harder to value these assets that are these debt-laden assets. And you're basically talking about cause and effect here. You're talking about a domino effect of just coming down, and it caused basically panic even on the big players today on Wall Street. Goldman Sachs got hammered. In fact, we just talked last week about Goldman Sachs needing to hold 156 to 157. And then we talked one day later how it closed at 154, I believe, and I believe that was on Monday, how it closed below. That was either Monday, maybe that was actually Friday. Either way, it closed below that key level. Today it broke $100 and traded lower to about 197, 198, 199 before rallying back to close at 114.5 on the day, down 18.5 points. Just think about that. The biggest, the most confident firm on Wall Street here, the biggest firm in the country, if not the world, kind of carries the golden ticket, if you would, from $154 within a few days, underneath 100. Morgan Stanley, another one, and I'm going to start showing these charts a little. Let's look at Goldman. Goldman's daily chart, folks. Look at this fall. All right, remember, this was the level right here at 157. You guys remember it very clearly, I'm sure. Here it closed below that 157. Look at what happened. That was a key level we had talked about in these videos, and you have to watch these videos and pay attention to these key levels because they are so key. And you're seeing how they're playing out right now on the market. Morgan Stanley, they pre-announced earnings, which was meant to kind of allay fears of what was going on out there, and the stock was actually trading up about $3 after hours yesterday, especially after the AIG news. But you know what? There was talk again on Wall Street and in the media today, and as soon as that started, and I heard it pre-market, I was watching this, folks. This was trading flat on the morning this morning. Morgan Stanley we're talking about, and then on TV, a couple people started talking about how it could be the next Lehman, and before you know it, this thing goes to $16 from $29, and then bounces back to $21.75 to close. You're just talking about mass hysteria here, and it's listen, to be honest, should people be worried? Yeah, absolutely. It's the financial basis of this country, all right, that's under attack right now. Not even under attack. It's from stupidity. I'll be flat out and open and honest, folks. Stupid. Absolutely stupid. So, listen, all we do as traders, all we do here at In The Money Stocks is try to guide you guys through. As a trader myself, majority of everything in cash right now, and oh man, am I glad for that. Now, I feel bad for a lot of people that are fully invested in, 401ks and IRAs. There's not much to do there. I mean, what can you do at that stage? As a trader, as a day trader, we go into the nighttime with a majority of cash position. So this way we have liquidity to trade the next day and day trade. It's still a wild market, folks, any way you cut it. Let's take a look at what the futures did today because it was a wild day on the intraday level. The market basically sold off from 8 o'clock, and you can see it right here. 8 o'clock starting to sell. You get a little bounce at 9:30. So here's your 8 o'clock sell-off to 9:30. 9:30 you get that initial open in the market bounce, and then selling started by 10 o'clock. Remember, we talk about key reversal time periods. 10 o'clock is a key reversal time period. If you rally up after a sell-off into the 10 o'clock time frame, oftentimes traders out there will look for a sell coming in, and sure enough, it worked today. Now, you basically came into this level right down here where you stayed most of the midday afternoon, I should say. Early afternoon, midday. And you can see that kind of bouncing up, down, and then what did you see? Well, all of a sudden the market's got a bid here, and it was a beautiful rally. The futures on the ES here, and we're talking about the ES futures, were down like 52 points. And interestingly enough, folks, by the way, this was right at yesterday's lows, so you obviously knew you were going to have support there. And let me see if I can trend back to show that from yesterday. Let's see here. It's hard to. It's right over here, though, folks. Basically, it's right over here. But we'll look at the maybe the 60-minute in a minute and show that a little clearer. But in any case, you're at support here, so you know you have good support. Then they start to rally the markets, and this was a tremendous rally where the markets got lifted basically from minus 52 points on the futures to minus 25. You're talking about cutting the loss in half in a span of about an hour. Huge rally. All right. Nonetheless, the markets were still down. I mean, the Nasdaq was down basically 95 points at the lows here, and then all of a sudden it was down about 50 points or so. So that just shows you the unbelievable nature of the rally. But then all of a sudden, guys, people just said, you know what, I'm not holding anything overnight here. Just like day traders, I guess everyone was behaving that way. They sold. Market closing at the lows, and again, the Nasdaq closing down almost 110 points. The Dow down close to 450 in a bloodbath of ginormous proportions. So, it's hard to describe what's going on out there, folks. I know there's been a lot of talk about the shorts and naked short selling. In fact, they've put in rules now to stop short selling and penalize and so forth if you're not short selling itself, but not having the shares to borrow and naked shorting essentially. So that they're hoping will protect it. But I'll be honest, folks. You can try to blame this, that, and that. The fact of the matter is, companies out there made ridiculous decisions, and here at In the Money Stocks, we've been pointing to this for 2 to 3 years now. Those of you that have joined us and been with us for a year and a half to 2 years back in early 2007 know that we were right on top of this, warning about this coming. And why people didn't see this, why companies, why these CEOs, and even the government officials didn't see it, Paulson didn't see it, I don't know. I frankly don't know, but we're in a pickle now, and we got to kind of, unfortunately, even those that know now, we're going to all have to deal with the consequences of it, and it's what you got to do. So enough of my ranting and raving. I just want to get into the daily charts here and just kind of look at things. But, could we bounce tomorrow? Yeah, it's always a possibility. You had a huge sell-off. I will release this now, folks. We have a lot of stuff lining up. A lot of our indicators are lining up, and I'm up for a turn date or pivot day coming up Friday through Tuesday, okay? So we do have it on Monday, set up for Monday right now, but it can be a day on either side or 2 days on either side. So just look for that to be a pivot day. We have a lot of signals pointing to that. As we get, into tomorrow's video and so forth, I'll be able to isolate it maybe even a little more, but really that's what you're going to start to look for, okay, folks? So keep an eye on that, is that we are getting a lot of that. And it's been a while since we've had one, but you can see why we haven't, The market's been an ugly, wild market with unbelievable up moves and down moves, more down moves recently than up moves, but nonetheless, the moves have just been ginormous, and you got to be careful here. So again, turn date, pivot day coming up. It looks like Monday-ish, give or take a day on either side. Be ready for that. Obviously, just be aware of it. Is it something necessarily that we all should trade, or I should speak from my perception? Should I necessarily be jumping in and out of the market trying to, you got to be careful. That's the one thing. I know I will be careful. I'm a very disciplined trader. I don't mess around. And so I can just tell you what I'm doing, and I'll be very cautious either way, but it does look like that's lining up. Okay, let's go into the daily SPY here. Number one, we talked about this was a key support that we had drawn in yesterday. This was another key resistance level. Now notice how we had come down to this support line on Monday. Tuesday we had gapped down, but we recaptured the support line, and we had gone into the resistance line. Well, today, look where we gapped. We gapped lower below the support line. That was a very negative signal. All right, when you gap below a support line like this, you got to be careful. All right, because it's all of a sudden showing some very negative situations there, and you can see what happened, guys. You didn't even get back above it. This is from overnight action, or actually earlier, but this is not necessarily the correct print. What you're looking at really the body here and the nature of this selling, all the way down, closing at the lows here, actually taking out the lows from yesterday as well. So be careful. Notice the volume, guys. Huge volume. Unbelievable volume. Could this be capitulation? It could be the start. It could be the start. We're still positioning ourselves for an October bottom in this market, but could it be a near-term area because of the volume surge? Yeah, it could be, but again, we're still looking at the turn day, pivot day for Monday-ish, give or take a day in the near term. All right, so we'll update you guys on that. Looking across the board, folks, Google got slammed today, down 28. Baidu down 12. Apple down 12. RIM down 7.75. Amazon down 7. I mentioned Goldman Sachs, which just got slaughtered today. On the downside, what are you looking for now? Well, there's not much to look at, guys. You want to really see now where we go from here tomorrow. I want to start basing it off the possibility of a turn date coming in, and I just want to get ready for the possibility of a reversal in trend in at least for a little while before we get the next possible push to the downside. All right, these videos aren't really long enough for me to do much more. I'm running out of time here as YouTube limits me to about 11 minutes. But again, you got to join the new website, folks. We're going to have so many more products under our research center, including these videos, daily market reports with key levels, turn dates, you name it. Come join the new site. It should be up on Monday. Till then, just enjoy them on YouTube. Take care, guys. Have a wonderful, safe day.